All right, let's jump right into it. Today, we're unpacking the literal DNA of the modern financial revolution. I mean, forget all those buzzwords for a second. Fintech, AI, crypto, you know the drill. To really get a grip on where finance is actually heading, we have to peel back the curtain and demystify the underlying technology that's driving the whole shebang. So, in this explainer, we're going to uncover the fundamental forces that are completely reshaping our world. We really find ourselves at this fascinating intersection right now, right? Where traditional value meets cutting-edge technology. But here's the thing. To truly grasp the future of things like AI and crypto, we first need to understand the three specific technological forces that are converging to power them. Think of them as the unsung heroes of this entire financial revolution. Okay, let's take a quick look at our agenda, which is basically going to serve as our mental roadmap for today. We'll cover 1. The modern tech revolution. 2. Exponential computing power. 3. The data explosion. 4. Hyperconnectivity and 5G. And finally, 5. The cloud convergence. Starting right off with Section 1, the modern tech revolution, setting the stage. Moving right along to Section 2, exponential computing power, from Apollo to quantum. Now, our very first pillar here is computation. And honestly, the math behind our growth is just staggering. To put it in perspective, the smartphone sitting in your pocket right now, it is millions of times more powerful than the combined computers NASA used to land Apollo 11 on the moon back in 1969. I mean, computing power has just exploded, while the costs have absolutely plummeted to the floor. For decades, this exponential growth has been driven by Moore's Law. You've probably heard of it. But we're actually hitting a massive, literal physical roadblock today. With Intel's advanced Skylake transistors now measuring just 100 atoms across, well, we are scraping against the fundamental limits of physics. We literally just can't make them much smaller. So where do we go from here? Well, the future lies in a completely different paradigm: quantum computing. While your traditional computers use binary ones and zeros, quantum computers use counterintuitive subatomic properties, like superposition, to actually be a 1 and a 0 simultaneously. It's wild, but this allows them to process incredibly complex tasks, like, say, identifying arbitrage opportunities across vast financial portfolios exponentially faster. All right, let's move to Section 3, the data explosion, zettabytes and sensors. And this perfectly builds into our second pillar. Because we have all that cheap processing power, we're now collecting data at a scale never before seen. Think about this. In 1956, the IBM 305 RAMAC needed 2 entire refrigerators of physical space just to store 5 megabytes, and that costs $10,000 per megabyte. Today, a 500 gigabyte drive fits right in the palm of your hand for a fraction of a single cent per megabyte. This total collapse in cost means we now save absolutely everything. And the sheer volume of data we're talking about today is just mind-blowing. Former Google CEO Eric Schmidt actually noted that we now create as much new data every 2 days as all of recorded human history up to the year 2003. Let that sink in for a second. Every 2 days. Now, you might be asking, okay, so what? Why does all this sensor data actually matter to finance? Well, let's take auto insurance as an example. Instead of relying on static, old-school actuarial tables based just on your age or gender, an insurer can now use the continuous streams of data from your actual driving habits. When you brake, how fast you accelerate, if you're driving late at night, to completely personalize your premiums on the fly. Of course, with this massive accumulation of highly sensitive personal data comes a major regulatory challenge. Policies like Europe's GDPR force policymakers to walk a very tricky tightrope. They have to carefully balance individual privacy against public security, all without suffocating business innovation. It's a massive governance puzzle that's actively shaping our global economy right now. Which brings us to Section 4, Hyperconnectivity and 5G, a global web. So we have the computational power and we have the mountains of data. Now let's trace how we physically share it all. We have gone from a Stanford network literally crashing after sending just 2 letters, L and O, back in 1969, to a modern, hyper-connected world that is racing toward instantaneous 5G speeds, connecting everything from our cars straight to our refrigerators. To really put our current level of connectivity into perspective, a staggering 640 terabytes of data are transferred across the global network every single minute. That is an absolute torrent of information flowing ceaselessly around the world 24/7.
But here's the catch. We have to remember that this hyperconnectivity is actually intensely physically vulnerable. It relies on over 1 million miles of physical undersea fiber-optic cables. This vulnerability was starkly highlighted back in 2010 when a fishing trawler accidentally severed a submarine cable, literally knocking the entire country of Mauritania offline for 48 hours. Our digital world has a very physical and surprisingly fragile backbone.
And that brings us to the climax of this explainer. Section 5, the cloud convergence, bringing it all together.
So what actually happens when you smash exponential computation, infinite data, and hyperconnectivity all together? You get the cloud. It's a massive paradigm shift. Instead of storing your data on these static, expensive backroom servers, computing has completely shifted to a massive shared pool of dynamic resources where organizations can scale storage, power, and bandwidth entirely on demand. To really give you a sense of this scale, just consider Amazon Web Services. A single AWS data center can house up to 80,000 servers. By monetizing their idle computing cycles, AWS created a side business that drove over $5 billion in operating income in just the first 3 quarters of 2018. It's just a colossal aggregation of power. So how does this actually change business on a day-to-day level? Well, for a financial institution, instead of buying expensive static servers just to handle a peak market day, servers that literally collect dust the rest of the year, you just rent exactly what you need. You scale up instantly when you're slammed, and you scale right back down when you're not. Pay for what you use. This extreme capital efficiency is exactly why the cloud is the absolute foundation of modern finance. It provides nimble fintech startups and traditional banking giants alike with the raw computational horsepower they need to run incredibly complex systems. We're talking about deploying deep machine learning algorithms that can literally predict stock market movements. So, we've seen how the cloud, big data, and hyperconnectivity have totally revolutionized finance as we know it today. But as we look out to the horizon, we are facing a profound challenge. With future quantum computers threatening to theoretically break our current data encryption in a matter of mere seconds, I want to leave you with this final, provocative thought. When quantum computing finally arrives, will our modern financial networks actually be ready? Thanks so much for joining me on this explainer, and keep questioning the technology that drives our world.